Let's talk about the American dream. That iconic image deeply ingrained in our collective consciousness. The house, the fence, the perfectly manicured lawn, the promise of wealth and security for generations to come. It's a powerful symbol. We've been told time and time again that homeownership is the best, the safest, the most reliable investment you'll ever make in your entire life. But here's the truth. A truth that might sting a little. That's a modern myth, a carefully constructed narrative that doesn't always hold up under scrutiny. For most of the 20th century, if you adjust for inflation, home prices barely budged. They certainly didn't skyrocket the way many people imagine. The real estate boom of the late 90s and early 2000s, the period that cemented this idea of housing as a guaranteed investment, an anomaly, a bubble fueled by speculation and unsustainable lending practices, not the norm, and certainly not a reliable predictor of future performance. Yet despite the evidence, the myth persists, stubbornly clinging to the collective imagination, fueled in part by parents, the baby boomer generation, who bought relatively cheap decades ago and now see their homes as gold mines, proof of their financial savvy. But let's put aside the anecdotes and the emotional arguments for a moment and look at the cold, hard numbers. Since 1928, the S&P 500, a broad measure of the stock market, has averaged about 10% annual returns, including dividends and accounting for inflation. Homes? Historically, after factoring in all the costs of ownership, property taxes, maintenance, insurance, they've returned just 1–2% after inflation. We've fundamentally confused a place to live, a basic human need, with a high-performance asset designed to generate significant wealth. And the truth is, they're simply not the same thing, no matter how much we want them to be. One shelters you from the elements, provides a safe haven for your family. The other, when properly managed, builds real, lasting wealth that can secure your future. So why do we cling so tightly to the myth of homeownership as the ultimate investment? Because it's deeply emotional. A home represents stability in a chaotic world, a sense of permanence. It's a place to build community, to connect with neighbors and create lasting bonds. It's where we create memories, where we raise our children, where we experience the joys and sorrows of life. But let's not forget that banks and the government have a vested interest in perpetuating the myth, in convincing you that taking out a massive 30-year loan is a brilliant financial move. What's good for the financial system? What keeps the gears of the economy turning? Isn't always necessarily what's best for your individual net worth. It's time to take a step back, to separate the powerful emotional value we place on a home from the cold, hard financial reality of its performance as an investment. The dream of homeownership is lovely, a comforting vision, but the math, when you really dig into it, can often be a financial nightmare. So, you've bought the house. Congratulations! It's a huge milestone, a dream come true for many. You've signed the papers, popped the champagne, and are ready to settle in. Welcome to the world's most expensive club, homeownership. It's an exclusive club, but unlike others, the fees never really stop. The purchase price, that big number you focused on, is just the beginning. It's the tip of the iceberg. The hidden costs are relentless, lurking beneath the surface, ready to surface at any moment. They're the silent killers of your budget. Meet the 4 horsemen of homeownership expenses. These are the recurring costs that will haunt you year after year. Taxes, the unavoidable, ever-present obligation. Insurance, protection against the unexpected but a constant drain on your finances. Maintenance, the ongoing effort to keep your house from falling apart. And repairs, the inevitable breakdowns that always seem to happen at the worst possible time. Property taxes levied by your local government, a forever fee that only goes up. Reassessed annually, they rarely decrease. Homeowners insurance, protecting you from fire, theft, and other disasters. Required, recurring, and always rising. Premiums increase with inflation and claims history. These alone can add thousands to your annual costs, significantly impacting your budget. Then there's maintenance, the constant upkeep required to keep your home in good condition. Mowing the lawn, cleaning the gutters, fixing the leaky faucet. An endless list of tasks that never seems to get shorter. That experts say can cost 1–4% of your home's value every year, a significant chunk of change. On a $500,000 home, a fairly average price in many markets. That's up to $20,000 just to keep it standing. Money that could be used for travel, investments, or simply enjoying life. And repairs, when things break down, and they will. The water heater, essential for hot showers and clean laundry. The roof, protecting your home from the elements. The HVAC, keeping you comfortable year-round. Each can cost thousands just to keep your home functional. These are not small expenses. These aren't investments, things that generate wealth. They're expenses that eat away at any appreciation, diminishing your returns. Add it all up, and your home's modest value increase can be wiped out, leaving you with little to show for your investment. You're not building equity as quickly as you think. You're just treading water, struggling to keep your head above the financial waves. The investment part of homeownership? Is it really an investment at all? Often a financial black hole, sucking your money away with no return? The real winners are the tax collector who gets a cut every year, the insurance company, profiting from your premiums, and the hardware store, selling you the tools and supplies to keep it all going. Your house isn't making you rich, despite what you might have been told. It's making you busy and broke, constantly demanding your time and money. The hidden costs are the real story, the untold truth about homeownership. Homeownership is a subscription, not a gold mine, a recurring expense, not a guaranteed path to wealth. The dream comes with a hefty annual bill, one that many homeowners underestimate, and most people never see it coming, blindsided by the true cost of owning a home. Here's the real kicker opportunity cost. Every dollar in your house is a dollar not working for you elsewhere. Imagine putting $100,000 into a house in 2005, or into an S&P 500 index fund. The house might double in value over 20 years. But the index fund? That $100,000 could grow to over $500,000, even with market crashes. That's the difference between retiring early and working forever. And it's not just the down payment, think closing costs, renovations, endless repairs. All that money could be compounding, building real liquid wealth. Instead, it's locked in drywall and granite. Homeownership forces you to concentrate your net worth in a single, illiquid, underperforming asset. That's the opposite of smart investing. Equity in your home isn't paying your bills or funding your retirement, it's just sitting there. By choosing a house as your main investment, you're choosing a slower path to wealth. You're sacrificing financial freedom for a backyard you have to mow. The real party is happening elsewhere, and your money's not invited. Let's talk liquidity. It's a term thrown around in finance, but what does it really mean for you, the average homeowner? We're not just talking about having cash on hand. We're talking about the ease and speed with which you can convert your assets into spendable money. Liquidity boils down to one crucial question: how fast can you turn your asset into cash? This is the key to understanding its true value in your financial life. With stocks, it's instant. A few clicks, and your investment is transformed into readily available funds. With a house, it's a marathon. A long, arduous process with no guaranteed finish line in sight. Need cash fast? Good luck. You're about to enter a world of frustration and uncertainty. Selling a house can take months, even years. The market fluctuates, buyers are fickle, and the process drags on and on. On paper, you're rich in home equity. Your net worth looks impressive, a testament to your investment. In reality, you can't spend it. That equity is locked away, inaccessible when you need it most. To access it, you have to sell. You have to go through the entire selling process. An ordeal of agents, each taking a cut and adding to the complexity. Showings, endless streams of strangers traipsing through your personal space. Negotiations, often stressful and drawn out, chipping away at your asking price. And waiting. Waiting for offers, waiting for inspections, waiting for closing, or maybe a HELOC, a home equity line of credit. That's just more debt, and banks pull back when you need it most. They are happy to lend when times are good, but quick to slam the door when you are in need. Your wealth is locked up, inaccessible and untouchable, hostage to the market and buyers' whims. You are at the mercy of external forces beyond your control. A stock portfolio can be rebalanced in a day, adapting to changing market conditions. A house is a block of capital you can't move. It's a static asset in a dynamic world. This lack of flexibility can trap you, limiting your options and opportunities. Can't move for a job because selling your house is too difficult or time-consuming, stuck in a declining area. Your biggest asset is now dragging you down. What should be security becomes stress, a constant source of worry and anxiety and inflexibility. You are tied to a single location, unable to adapt to life's changes. Home equity is not freedom, it's a gilded cage, it's a cage. A comfortable cage perhaps, but a cage nonetheless. The illusion of wealth is just that, an illusion. It's not real until you can actually use it. True assets are liquid and adaptable. They empower you to seize opportunities and navigate challenges. Your house? It's just a fortress for your money, with you locked inside. A beautiful fortress maybe, but still a prison of sorts. Don't mistake bricks for financial freedom. True freedom lies in liquidity and adaptability. Location, 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 it's not a secret, it's a gamble. Buying a house is betting your future on one tiny spot on the map. Neighborhoods change, schools decline, employers leave, trends shift. Think of Rust Belt cities, homes once valuable, now nearly worthless. With stocks, one company fails, you barely notice. With a house, your whole investment is at risk. You have zero diversification. Your wealth is tied to forces you can't control. Zoning laws, city councils, economic shifts. Any can tank your home's value. You're making the biggest financial decision of your life based on a snapshot in time. That's not investing. It's a leap of faith, and faith doesn't pay the bills. Let's be honest. A mortgage means the bank owns your house, not you. For decades, you're a glorified property manager for your lender. Early on, most of your payment goes to interest, not equity. You're renting money, not building wealth. Over 30 years, you'll often pay more in interest than the house itself cost. Your home needs to double in value just to break even on financing. The mortgage is a revenue stream for the bank, not a wealth-building tool for you. True ownership comes after decades, when you're nearing retirement. Every dollar in interest is a dollar lost to compounding elsewhere. The mortgage isn't a bridge to wealth, it's a detour. Let's be fair. Owning a home isn't just about money. There's real value in stability, control, and community. You can paint, renovate, plant a garden, make it yours. Home ownership can foster deeper community ties and a sense of belonging. For families, the stability is priceless. These are real, meaningful benefits. But don't confuse emotional returns with financial ones. It's fine to pay for these intangibles if they matter to you. Just don't pretend it's a great investment. Love your home, cherish your memories, but don't call it your best asset. It's a place to live, not a place to grow your money. That's the honest truth. If your house isn't your best investment, what is? The stock market, volatile, yes, but undefeated over the long term. Low-cost index funds or ETFs offer broad diversification and growth. Consistent investing or dollar-cost averaging builds wealth through compounding. Entrepreneurship is another path. Build a business, create value, generate cash flow. The key is separating your housing decision from your investment strategy. Renting isn't throwing money away if it lets you invest more elsewhere. A smaller home can free up capital for smarter investments. Build a diversified liquid portfolio, stocks, bonds, REITs, your own business. Your home is where you live, your investments buy your freedom. The old American dream was a checklist job, marriage, house, but times have changed, and so should our definition of success. The real goal is financial freedom, the power to choose your life, unchained from money worries. A big, illiquid house often limits your options, not expands them. True freedom is about liquidity, flexibility, and cash flow. Homeownership is a lifestyle choice, not a financial strategy. If you can afford it and value the stability, go for it. But do it with eyes wide open. Do the math, know the opportunity cost, and stop calling your house your primary investment. Your real investments should be diversified and designed for growth. Let's redefine the dream: autonomy, choice, and a future you own. Build a portfolio that funds your passions and secures your future. The white picket fence can be beautiful, but don't let it become a cage. The new dream: own your future, not just your house.